Tuesday, December 31st, 2019, Maneco 64, home of alternative economics and contrarian views. Today I want to talk about the Federal Reserve, its private, public nature, the hybrid nature, and prove to you that it's a lot more private than it is a public institution. And I'm going to look at the numbers. You follow the money. That's the best way to do it. I'm going to reference some books as well. I'm going to recommend some books about the Federal Reserve. The books I'm going to reference, though, are mainstream books. So people can't say, oh, this is so-and-so, so-and-so. But you can even prove it through mainstream books. Before I go into the Federal Reserve on the final day of the year, and the reason I'm doing that is because central banking is not natural to a free market and a free society, of course. We need to have freedom of choice. It's not only a moral or ethical thing. Of course, it is morally wrong that only a few chosen people that have a monopoly to create credit and the currency. But it's also a matter of freedom of choice. And money isn't any different. Money is the most marketable commodity in the market, and it should be left alone to the free market. Before that, of course, I'm going to quickly look at the markets this morning. It's 8:34 a.m. Yesterday, the stock markets had a little bit of a sell-off, probably profit-taking at the end of the year. Strangely enough, though, I saw that the bond market yields actually rose by 5 basis points at one point, the 10-year yield. They did drop back after a while, but yeah, that was interesting. So right now, spot gold is doing quite well this morning. We're up about $9 at 15.24. The low's been 15.14 and the high 15.25.62. So for now, gold is having a good end to the year. Technically, it's still looking very good. Of course, we've broken out of that falling wedge. And we're not that far from the high of this year, around 15.55. Spot silver is up 1% at $18.08. So silver, the range has been 17.89 to 18.15. The Dow future is up 10, so fairly quiet. We're at 28,478. S&P is up 2. And the NASDAQ 100 future is up 10 points. Currencies, sterling is up slightly here at 131.22. The euro is above 112 here. It's up 0.1%. So yeah, the dollar has drifted lower quite a bit against those two currencies. Yesterday as well, it dropped quite a bit against the yen, and it's continued to drop against the yen overnight. It's down 0.2%. Dollar fetching 108.66. Dollar is also weaker against the yuan, down 0.25% at 6.96. Crude oil, WTI 61.33, down 1/3. Brent 66.40, also down 1/3. Quickly look at the bond markets. 10-year yield is at 190. Yeah, yesterday it was up to like 194, 195. So it's backed up a little bit, but strange that the yield went up while the stock market was down around 200. We'll have to keep an eye on that going forward into the new year. So the Federal Reserve, yes, in my opinion, it's mostly private. And I'll show you why I think that is true. First of all, I want to go through a quote by Thomas Jefferson, and I'm actually taking an article from a few years ago from Forbes magazine by Robert Lentzner. He says Thomas Jefferson warned the nation to beware the power of the banks. So I'll go quickly through this article. He says, Before there was John Kenneth Galbraith or Joe Stiglitz or Nouriel Roubini or Simon Johnson or Niall Ferguson or Occupy Wall Street, there was one of the founding fathers, Thomas Jefferson, giving an advance warning of 2008, some 200 years ago. An awesome foreboding it was too. So this was the quote from Thomas Jefferson. I believe that banking institutions are more dangerous to our liberties than starting armies. He also said, if the American people ever allow private banks to control the issue of their currency, first by inflation, then by deflation, the banks and corporations that will grow up around these banks will deprive the people of all property until their children wake up homeless on the continent their fathers conquered. That's very relevant today. If you look at the data, the inequality or wealth data, which actually the Federal Reserve Board publishes, the top 9% of the people, the very top, they own about 82% of all the wealth now in the United States. He goes on to say, Thomas Jefferson, another quote, the issuing power of currency shall be taken from the banks and restored to the people to whom it properly belongs. Robert Lenzner says, we should all meditate on the amazing prediction of things to come that are not necessarily beneficial to the 99%, but only to the 1%. And I would argue that the Federal Reserve has been instrumental in this process of, as Thomas Jefferson said, depriving the people of all the property until their children wake up homeless on the continent their fathers conquered. So yeah, I think the Fed has been instrumental in the last 105 years in doing that. So now I'm going to recommend a few books that I really enjoy purely about the Federal Reserve. So one of my favorites is The Secrets of the Federal Reserve by Eustace Mullins. That's the first one. He was kind of the pioneer of exposing the Federal Reserve in terms of writing a book. Of course, there were others that tried to expose the Federal Reserve even before Eustace Mullins, like Charles Lindbergh Sr. or Louis McFadden, who was a congressman or a senator, I'm not sure. Charles Lindbergh as well was a congressman for Minnesota. So that's one of my favorites by Eustace Mullins. He was encouraged to research the Federal Reserve by the poet Ezra Pound. The other one is The Creature from Jekyll Island, a second look at the Federal Reserve by G. Edward Griffin. That's a very interesting one. You need, I think these two are essential in having if you want to learn about the Federal Reserve and how it was created. And the other one, of course, is Ron Paul's And the Fed, New York Times #1 best-selling author of The Revolution and the Fed. So I'm not going to take material from these books to prove to you that the Federal Reserve is actually mainly private. I'm going to look at some other books that are more mainstream. The first one is Alan Greenspan's The Age of Turbulence, Adventure in a New World. That's the first one. And the second one is one that I read many years ago, probably in the late 80s, early 90s. The House of Morgan, The Secret History of Money and Power. It even says here, The Secret History. Ron Chernow. So I'm going to look at those two. So I'm going to start with that. And I'm going to go through some passages here to show you how private the Federal Reserve really is. So this is on page 128 of Ron Chernow's book. From the ashes of 1907 arose the Federal Reserve System. Everybody saw that thrilling rescues by corpulent old tycoons were a tenuous prop for the banking system. Senator Nelson W. Aldrich declared, "Something has to be done. We may not always have Pierpont Morgan with us to meet a banking crisis." By confirming his storied powers, Pierpont also inadvertently fostered talk of an omnipotent Wall Street money trust. President Roosevelt now recommended federal regulations on the stock exchanges, while New York Governor Charles Evan Hughes wanted margin requirements raised from 10 to 20%. If these suggestions had been enacted, the country might have been spared some of the lurid excesses of the 1929 crash. The one direct consequence of the 1907 crash was a universal clamor for banking reform. In 1908, Congress passed the Aldrich Freeland Currency Act, which created a National Monetary Commission to study changes in the banking system. The commission was chaired by Senator Aldrich of Rhode Island, and the House of Morgan quickly moved to exert influence on it. Perkins cabled Pierpont in London that he and George F. Baker, the walrus-mustached head of the First National Bank, had stayed away from Washington lest the new legislation be seen as a Wall Street plot. At the same time, Perkins sent a coded cable saying that Harry Davidson, Baker's young protege, would be Aldrich's advisor. So you see, the bankers are involved in all of this. It is understood that Davidson is to represent our views and will be particularly close to Senator Aldrich. I think Senator Aldrich's daughter was married to a Rockefeller as well. So that's another point I would like to make. Davidson had been Pierpont's coup lieutenant during the '07 panic and had greatly impressed him. When the Aldrich Commission was about to depart for a tour of Europe's central banks, Davidson went ahead to confer with Pierpont, who wanted a private central bank on the Bank of England model. So there you go. J.P. Morgan, John Pierpont Morgan, wanted a private central bank based on the Bank of England model. Davidson would be the only banker to accompany the senators and congressmen on their mission. So there you go. That's quite clear that J.P. Morgan wanted a private central bank. So I'll move a bit forward here. This is also an important part. When Senator Aldrich presented his bill for a central bank to Congress in 1910, that was the Jekyll Island plan, the Democrats blocked it. In 1913, Congressman Carter Glass, a Virginia Democrat, used it as a basis for the Federal Reserve Act, although making extensive modifications. President Wilson succeeded, demanding that the system of 12 private regional reserve banks be placed under a central political authority, a Washington board that would include the Treasury Secretary and presidential appointees. Progressives hope the Federal Reserve would reduce the House of Morgan's unique power. So as we shall see, the truth was far more complex for the bank, and that means the House of Morgan would skillfully harness the Fed and use it to amplify its powers. In an ironic outcome unforeseen by reformers, it would become the private bank of choice for central banks throughout the world, giving it an incalculable new advantage. So the Aldrich plan was basically the result of the Jekyll Island meetings at which Senator Aldrich was present. They had to modify it slightly. What they did was add a board of governors in Washington, but they kept, of course, the 12 private regional banks just to pretend that they weren't in charge, that the people on the board were in charge. But the other thing, Carter Glass as well, if you go forward here in this book, they talk about Carter Glass. And it's on page 206, and how closely he was to the House of Morgan. During this period, Tom Lamont, who was a Morgan banker, acquired his keen interest in foreign affairs. In 1917, he was already traveling with Chernow House to Europe to study the European situation. Then Treasury Secretary Carter Glass appointed him as a financial advisor to the U.S. delegation at the Paris conference. So there you go. Carter Glass working closely with the House of Morgan. Carter Glass modifying slightly the Aldrich bill into the Federal Reserve Act. As you can see, J.P. Morgan wanted a private system. He got it. Yes, they created a Federal Reserve Board. That was just a cover. I would say that the 12 regional banks are a lot more powerful, and I'm going to give you proof of it. That's published today in plain sight. Now let's go to Alan Greenspan's The Age of Turbulence. And I think this passage here will prove to you how important the private bankers are, especially J.P. Morgan. Here on page 78, Alan Greenspan is talking about when he left the White House, the Gerald Ford administration. He was an economic advisor there. He joined a few boards of big corporations, and this is what he says here on page 78, Alan Greenspan. Among all the boards I joined, J.P. Morgan's was the one that I found most engaging. It was the holding company for Morgan Guarantee, arguably the world's premier bank. The board was a roll call of America's business elite. Frank Carey of IBM, Walter Fallon of Eastman Kodak, John Dorrance of Campbell Soup, Louis Foy of Bethlehem Steel, and me. We would meet at 23 Wall Street, which J.P. Morgan himself had built in the era when he reigned over American finance. On the fortress-like facade, you could still see the pockmarks from the terrorist bombing of 1920, when in the middle of a busy day, a horse-drawn wagon of dynamite shrapnel was set off in front of the bank, killing and injuring dozens of people. Being on the Morgan board was a wonderful opportunity to learn the inner workings of international finance. It puzzled me, for example, that month after month the bank consistently showed a profit on currency trading. So there you go. I think he was being prepared to eventually become chairman of the Federal Reserve Board, right? His predecessor, Paul Volcker, also was a Wall Street banker. He worked for Chase in the 60s. So he also worked for the New York Fed, which is a private bank. Let's have a look at some websites. The first one I want to show you is federalreserve.gov. Here you go. Board of Governors of the Federal Reserve System. So it has a .gov. Now I want to show you a couple of the regional banks of the Federal Reserve System. I'll show you some of their websites. So I'm not going to show you all 12. You can have a look yourself, but they will all be the same. First of all, Minneapolis Fed.org. So if it was a government institution, how come it's not MinneapolisFed.gov? Federal Reserve Bank of Dallas, DallasFed.org. So you get the idea. And now, more importantly, now I want to show you the balance sheet of the Federal Reserve System, or the Federal Reserve, whatever you want to call it. It's under the website federalreserve.gov. And you might think, oh, all the Federal Reserve's assets, its balance sheet is held at the Federal Reserve Board. At first glance, it looks like all their assets are under the Federal Reserve Board. But then if you scroll down, and I think most people don't, And I never did up until a few months ago. I only looked at the total number. But if you scroll further down this page, you've got statement of conditions of each Federal Reserve bank. So these are all the regional private banks. And if you look at all the assets they hold, they're the ones who hold all the assets. Look at the New York Fed. New York Fed holds over $2 trillion in assets. So it's all under private control, these assets. So there you go. Follow the money and you find out that the Federal Reserve is privately controlled. Right now, I think the New York Fed holds over 51% of all the assets on the Federal Reserve balance sheet. And it's not held by the Federal Reserve Board in Washington. It's held by each private Federal Reserve regional bank. What's the solution? Well, the solution is to abolish the Federal Reserve Act. Much easier said than done, of course. What about auditing the Federal Reserve? Some people think it's a waste of time. You just need to end the Fed. Well, the problem is, as you see it here, these banks that hold all those assets on the balance sheet, that they're all private banks. Is it any wonder that Congress cannot audit them? There's nothing in the Federal Reserve Board in Washington. There's nothing on their balance sheet. It's all been cleverly put away in private regional banks, and that's why it can't be audited. What needs to be done is making people more aware of this, and that's why I do my videos. And even though I'm in the UK, in London, some people might ask, how does this affect you? Well, it affects the whole world because the Federal Reserve controls the whole world. When you read the books about the Fed, especially The Creature from Jekyll Island, you see the men that were behind this amazing swindle, I think. Very secretive, very well planned. They were probably the richest men in the world. They controlled most of the assets back then. They were the robber barons. They were financed by a lot of money from the city of London. Don't forget, in 1910, London was still the center of finance, not New York. So it's a world system. Even Brazil, where I was born, if you look at Brazil, the history, there was a coup in Brazil in early 1964. A lot of people say the CIA was involved. And then you look at the history of the Central Bank of Brazil, when it was created, well, December 31st, 1964. Coincidence or by design? That's why it's important to expose the Federal Reserve. It's a monopoly controlled by private interests, and it controls the supply of credit and money worldwide, not only in the United States. And not only is it morally and ethically wrong, but it's also it doesn't promote freedom, free markets. It doesn't promote competition. Why shouldn't we have competition in money and currency like we have competition in all other sectors of the economy? So if you enjoyed this video, please hit the like button. Please share it far and wide. If you haven't subscribed to the channel yet, think about subscribing. You can also follow me on Twitter, BitChute, DTube, and on Steemit. I wish you all a happy new year. Take care. Bye.